A common situation in the stock market is to have a large trend with only a few substantial reversals that can usually be covered by one or two large fib levels. Naturally, these larger reversals can often be captured within the negative 0.236 portion at new record highs. It is possible for the larger trend to have more significant reversals at or above negative 0.382, but the expansion of a fib retracement usually only retains greatest reliability until the negative 0.236 level. A rough approximation by moving the zero level higher reveals retracements to a trend can roughly take place between the low to mid 20% range of the distance of a fib retracement that covers a large trend. Even if the large trend produces an aggressive break to new high ranges, it is less common for price to continue 1/4 the distance of a large fib retracement without at least some moderate opposition. Expanded fib retracements can often be a preliminary choice to identify a range of interest that can oppose a trend reaching new record highs. Once opposition to the trend appears with reversal candles and developing swing points, the various fib techniques can be applied. The one with a level closest to the current reversal or retracement of the larger trend is usually preferred. In this case, the 1.272 level of a fib projection more closely approximates the peak after the chart cleared the previous record high ranges, around 26,000. This provides more recent validation of the fib projection being more suitable with its proportions for covering the progressing trend when the 30,000 mark around the 1.272 level was eventually cleared. When price flattens at a high range, such as around the 26,000 range from 2018 to 2019, that can affect expanded fib retracement and fib projection levels. In this example, the downswing high on January 26, 2018 was superior to the downswing high from October 3, 2018, since it resulted in an extension with the 1.272 level approximating the next major downswing points in early 2020 at the 29,000 range. When returning close to record high territory in late 2020, there are clear recent downswings for a fib retracement, but no significant downswings are covered with expanded fib retracement levels when minor retracements take place at new record highs above the 30,000 mark. A rough approximation by raising the zero level, unsurprisingly, doesn't do much better to intersect a fib level with the minor downswings that take place above 30,000. A fib retracement with projected levels also has similar results. The reason for these poor results is due to the familiar problem of referencing a large trend range that produces wide distances between fib levels, which are not precise for capturing minor swing points with projected fib levels or expanded fib retracement levels. It is also similar to using too wide of a base trend for a fib extension that can't precisely capture smaller swing points when volatility decreases. The solution is the familiar choice of using a narrower section of price action from the old downtrend or new uptrend that has projection levels align with recent downswing points. For more recent confirmation of these projection levels, identifying opposition to the uptrend. Expanding a narrower fib retracement with negative levels yields similar improvements in capturing areas of smaller downswings and price congestion opposing the uptrend above the 30,000 boundary. The decreasing volatility of the progressing uptrend into the second half of 2020 demonstrates how a stable trend with narrower price fluctuations will often have minor to moderate retracements within a range approximately 23.6% to 27.2% of a preceding fib retracements range when a chart rises towards new record highs. This is why even a rough approximation by moving the zero level of a fib retracement up can narrow down the range of a potential downswing after price moves beyond a fib retracement's current range. Similar phenomenon can be seen with a more aggressive uptrend that doesn't increase in bearish volatility too much by producing regular minor to moderate pullbacks during the climb to new record highs. Again, the rough approximation of moving the zero level of a fib retracement won't lose as much precision due to the stability of a trend like this. When a trend regularly encounters minor to moderate opposition to not produce any major retracements or reversals, it can be beneficial to add more projection levels to cover the finer details of smaller swing points. That is why it would be suitable to have the 1.618 level and levels between 2 and 3 on the chart. This chart of Activision stock is a mix of the previous Etsy and Dow charts in terms of having more regular sharp swing points that congest price with brief periods of increased volatility. The effects of these characteristics would normally lower the precision of fib levels from various fib techniques. However, since the large trend is quite stable with regular retracements often of less than 30%, there isn't a major impact on precision even when using a less precise method, such as raising the zero level of a fib retracement. The distances between fib levels are relatively wide due to the large trend used to define the fib retracement range. However, the stable trend characteristics limit the effect of lowered precision from wider distances between projection levels. A series of gaps and large price fluctuations at new record highs in early 2021 is a drastic departure from most of the earlier stages of the uptrend. Naturally, this results in decreased precision of the negative 0.236 level running more precisely through clear swing points around the 100 boundary.